Hello everyone. Today we're going to talk a little bit about accounting. Now, some of you might be wondering, accounting, what is that? Well, I can tell you one thing. It's not an old wooden ship. Accounting is something that's completely different and a really interesting new topic that a lot of people don't fully understand, I guess, what it's about. And so we're going to go through today what accounting is all about. So what you're going to see here today is accounting defined. Accounting is the planning, recording, analyzing, and interpreting of financial information. So basically what you're doing is you're talking about any sort of budgeting that you might do. That's the planning aspect. Any sort of recording, which is all about journal entries, which comes later on in the course. And analyzing things to see if you're either making a profit or you're losing money and finding different ways to actually maximize your profits or minimize your losses and to make yourself a much more efficient company. Essentially, as you're going to find as we do this, accounting is the language of business. It's like learning a new language. I find that people who are good at accounting often are good at math, obviously, but they're usually also pretty good at stuff like Spanish and different languages where they can find a pattern and just follow that pattern at all times. Accounting is probably the most patterned thing you're going to find. It's pretty much the easiest thing once you get the topic down. We're going to start with assets. Assets are anything of value that is owned. They must be quantifiable, they must be in dollars, and I'm basically saying you can't say what's this worth? Oh, it's worth 4 chickens and 2 goats. That doesn't quite work. It has to be quantifiable and in dollars. So examples of assets might include things like cash. Do you own it? Yes. Does it have value? Absolutely. Money that you're owed, believe it or not, is an example of an asset. It's called accounts receivable, which we'll get to down the road. It's got a value to it. I am owed $200. That's quantifiable. That's in dollars. That works out. Supplies, equipment, all examples of an asset. So something to get used to using is anything of value, again, that you own. You have to own it. Liabilities is something completely different. It's kind of the opposite. It's an amount a business owes. So once again, this must be quantifiable and it must be in dollars. We're not doing chickens. We're not doing goats. That's weird. We're just going to avoid those. Examples of the liabilities usually end in the word payable. So things like accounts payable, money you're owed. Basically, if someone says they're going to pay you in 10 days, that would be accounts payable. Salaries payable, money you're going to pay your employees. Another example of a liability. So once again, it's an amount a business owes, kind of the opposite of an asset. And finally, we get to everyone's favorite, owner's equity. This is the amount remaining after the value of all liabilities is subtracted from the value of all assets. In other words, it's the Mr. Daniels of the accounts. It's the other account. It's the one that doesn't fit in with anything else. If it doesn't go somewhere else, it probably goes in owner's equity. Once again, also, kind of like the last pick in gym class, which was not Mr. Daniels, believe it or not, even though he's 5'4.5". Owner's equity is something that you have to really think about when you get it. I've heard other definitions of owner's equity are things like an owner's claim on assets. Basically, this comes down to whatever the owner puts in or takes out of the company. So this is kind of a weird one, but you're going to see kind of how these correspond here on this next slide. Because what I have here is something called the accounting equation. Everything we're going to do today is based around this equation. What it's stating is that assets equals liabilities plus owner's equity. Now when you put this together, you're going to notice that assets is on the left side of the equation by itself. Liabilities and owner's equity are on the right side of the equation. And what we're going to do today is we're going to build our system around making sure that this equation is always in balance. I tell people all the time, if one of them goes up, the other one must go up. You must be in balance at all times. You want to avoid, terrible analogy here, the fat kid on a teeter-totter. It never works out for the rest of us. The fat kid always goes down, and then you go up, and it just doesn't work out. Unless you have 2 equally fat kids, of course, in which case it works out really, really well. So we're going to go ahead, we're going to stop this presentation here, and we're going to move on to doing the next one, which will be the problem section of this